Hello everybody, we are FXStreet and we are starting our live coverage from the Nonfarm Payrolls and the US Employment Report. We will start with Dr. Sivaraman and then for the first segment on spike trade calls, and then we will change to Valeria Bednarik, Yohay Elam and Dale Pinkert for a full live coverage. Hello Doctor, how are you?
Hello Mauricio, I am fine.
Okay, good to see you again here with us.
Thank you.
Thank you for coming, and this is your time.
Okay, fine. Good day to one and all. This is Dr. Sivaraman of i-knowindices.com. So I'll be giving the spike trade possibility during the non-farm payroll data release. The release is going to be by 13:30 GMT. So I'll be taking about 15 minutes to explain between 12:45 to 13 GMT what could be the scenario today during that of the non-farm payroll release. So it will be a live market analysis. I got the live market put page here and the GMT time frame here and also the chat. So in FXStreet live video chat, if you have got any questions, you can ask me. I'll be willing to answer to those questions before that of the non-farm payroll release. So it is going to be a prediction before that of the non-farm payroll, and also based on the market reading and also my forecast analysis, I'm going to give the trade calls for this particular session. So during this particular day, now we are in the European session, the fag end of European session. The market is expected to show swing and slide, and then from 14:30 GMT, they are expected to make the swing and rise move. And 13:30 is the data release time. That is the fag end of the European session. At that time, they could say simply it could be below than that of the expectations, and somebody might say that the risk aversion is there and euro and GBP could drop and things like that. But every time it will not be the same because the players have got different intentions during different time frames, and whatever the money they have deployed into that of the market, they cannot simply take it and use it elsewhere. They have to continuously use it in the market in order to manipulate, rig the market and earn money so that they will be able to sustain the richness. So now let us make a brief analysis with regard to the live market. This is the live market code page here. You come across euro is around 1.0872, GBP is around 1.4583, and USDN is around 118.31. And if you see the net change, euro is showing 58 pips negative net change, and GBP is showing 34 pips negative net change. But Australian dollar is showing 1 pip positive net change, and you know very well the players use the commodity pairs as the lead and then lag behind. So they intend to make the rise according to this market reading. And also, if you notice what they have done from the week beginning, they have been making massive corrections in the case of euro and GBP in order to create more and more of uncertainty. Thereby the traders were easily going for their sell and buy trade, and everybody was jittery to take any buy position in the case of euro and GBP. But from yesterday US session onwards, they started gaining the levels, which I explained it during that of the Monday, the Asian session live market analysis webinar, that before the event they make the drop or the rise in the market. That will be the false move to accumulate or distribute the positions, and after the event they show their true color or their intentions. So they intend to make a quick upward spike, and this is the year beginning time. So the market is going to be very volatile, that we cannot avoid. The players quickly gain the levels and book profit and again drop in order to accumulate the buy positions, because after that of the rise, many people tend to go in for the breakout trade. After the rise, they go and buy and aiming for, because once the resistance turns support, they go and buy and wait for the market to go up, but the players could quickly drop and hit their stops and then start rising it. from that of the US session. So as far as the trade calls are concerned, so I intend to buy euro around that of 1.0855, which is the initial low they are set today, and then in the case of GBP around that of the current low 1.4580, and in the case of Australian dollar closer to that of the data release, they could make a brief downward move around that of the psychological level 0.700, and then we could catch up around that level and aim for a sizable profit of about 100 to 150 pips in all these pairs. And in the case of USDN also, they are expected to make a dip in order to confuse the traders, and they are expected to make the contrarian move on the downside in order to handle the yen crosses. You would have seen how in the case of Euro Yen and GBP Yen, they made a massive drop during the last 3 days, and they started gaining the levels. So this is how they create the uncertainty, induce the traders holding reasonable and logical positions to liquidate their valuable positions. Once the margin erodes, their traders are forced to liquidate the positions. Later on, the players gain the market levels, and unfortunately, those who have got the lesser equity, they become afraid, and that we call it as a market fear, liquidate the long position and turn short in order to earn back the money, but the players earn all the money. So let me answer to the questions which are asked here. This is called the non-farm payroll fever, and there is no need to develop the fever. Once we are uncertain, then we will develop the fever, and also we will be cautious, and probably we could keep away from the market. But once we know the intentions of the players, and if you use the right trading strategy of using the hedge or the entry stop or buy stop or sell stop, that we call it in MT4 platform, and if you use it, we will only take a risk for 30 to 40 pips. And today I intend to keep the hedge orders 40 pips away from that of the entry level, as the volatility is expected to be little more during that of the year beginning time, because the players want to accumulate huge positions before making a big rise in the market, and later on they will simply give various other excuses and gain the levels. But if you refer to that of yesterday's move and day for yesterday's move, and you will be surprised to see that they gain the levels in euro considerably, and also in the case of GBP nominally, and in all other currencies, especially USD Yen, when USD was gaining the levels against other currency, USD Yen was also making considerable drop, making yen a stronger currency. This is how they try to make the moves in the market as a contrarian move. So if there are any questions, I'll answer to those questions, and you can just keep a note of these calls, and when they make a small dip closer to that of 13:30 GMT, that will be the false move before that of the data release. Then they will are expected to make a rise and then drop again, and then continue to gain the levels during the US session. So volatility is part of the game, and that's a great trading opportunity. Don't be afraid of such volatility. Use the trading strategy to limit the risk and maximize the profit. Okay, Mauricio, the mic is in your place.
Okay, thank you, Dr. Sivaraman. Thank you for your participation. And right now, I want to welcome our crew, Dale, Pinkert, Valeria Bednarik, and Yohay Elam. How are you guys?
Hi, Mauricio. Hi, Yohay. Happy New Year, Yohay. Happy New Year, Val.
Yeah.
Happy New Year, Doctor.
Everybody.
Hi, all.
I hope this is the best year ever for you guys in all ways.
It
That's
will
my
be.
New Year's hope for you.
Thank you, Dale. So let's start with a simple question for Yohay. Yohay, I was out of the market this week. I surprised that it was a really wild. So what happened? What happened in this week? Could you please explain me, somebody that was in the market lately?
I don't think we have enough time for that. No, sure. The year began with huge volatility. That was no surprise. But I think at least what surprised me is the dominance of the news from China over all the normal indicators that move markets, and the geopolitics, the fall in oil prices, the Saudi-Iranian tensions, the alleged H-bomb from North Korea. And these put the indicators sort of as second fiddle on the back burner. And in general, we had a great separation between safe haven currencies, the euro and the yen, which strengthened, and commodity currencies plus the pound, which weakened against the US dollar. That's sort of the general picture. We had these risk-on, risk-off pendulum swings, and now we're waiting. Now we had a bit of calm because we're waiting for the non-farm payrolls. Let's see. This calm will probably not continue for too long.
Thank you, Yohay. So, Valeria, what we need to pay attention today in that wild market?
Hi, guys. First of all, nice to be with you again. A great year for all of us. And, well, I do believe that I was thinking before we start this coverage, I was thinking that actually what has been provoking the strong reaction to non-farm payrolls was the fact that the Fed will or was in the mood of rising rates, right? So we actually had already a rate hike during December. So we need really today a really shockingly or either strong or disappointing number to actually see it move in the market. I do believe that this time, given that the Fed already rises its rates in December, the non-farm payroll report will be less relevant. Not bad. Not something that we can ignore, but less relevant than we have been seeing it lately, right? Anyway, the market is waiting for 200,000 jobs creation during December, and a steady unemployment rate around 5%. I don't know. I do believe that we may have a weaker than expected number, mostly considering that over these past few weeks, the unemployment claims have been rising, right? A bit above the average. So maybe we'll get us 160, 170 or so, but not much more than that. And if so, that can help the euro recover ground. Generally speaking, the market is mixed, at least for me, when it comes to trends and the currency's strengths, because I do believe that we have a strong Japanese yen and a really weak pound, right, and a rising euro. Okay, so if we have some, for example, that can or are going to be dollar negative, right, the pound may rise, but it will find selling interest at higher levels. While I believe that the downward rally in dollar Japanese yen will be pretty more interesting if we had a weak payroll. Anyway, it's a wait and see stance, you know. We can discuss pairs with the guys, but I believe that right now is a wait and see question.
Okay, thank you, Val. Now, Dale, I know that you have interviewed many people from everywhere, from perhaps from the United States, people from Paris and London. And what are people worrying the most in the market right now?
Well, let's just start with equities have stolen the show. That's where all the action has been. In fact, up until yesterday, Mauricio, this was the worst start since 2007 or 8 during the financial crisis. And as of yesterday, it's the worst start ever in history. So I know a lot of people say as January goes, so goes the rest of the year. But January isn't over, right? We're only a week into it. I'd say that people, besides being worried about their 401ks and their pensions, having a pretty bad start, and really a lot of the averages masked the underlying weakness in the market last year. So even though the averages were near all-time highs, there were many stocks and sectors already in bear markets. So I would say that the big worry on people's minds is whether this is another correction or something bigger in the equity complex. And the other worry is that you can't help, when you watch what's happening geopolitically, between Saudi Arabia and Iran, and you mentioned North Korea, and China's landing planes on that artificial island, and you tie that in with the forecaster Martin Armstrong's belief that World War III has begun, that makes money in your 401k look insignificant. So the worries right now are twofold. The worry that people always have is, how's their net worth going to be affected by markets? And then how are our lives going to be affected by global instability? To me, those are the two biggest worries. And this is an interesting NFP because I don't think the market knows what it wants. Does it want a strong number so that it's reinforced that there's another rate hike coming? Or would it prefer a weaker number so that people could go back to thinking maybe one and done, or way down the road for another interest rate increase, but yet that would question the strength of the economy and that perhaps the Fed should not have tightened? So it used to be good or bad news was good news for the stock market, and it's possible we're moving into a twilight zone where, you know, good news or bad news is bad news for the market, at least for now.
Yeah,
I
certainly.
see. Yeah, I see. What do you say, Yohay? What
Yeah,
is
to
your
pick
approach
up
on that?
what
And
you said. Sorry?
yeah, what is your approach on that? And what are your expectations for today's Nonfarm Payrolls?
Yeah, I agree with Dale. We're in this different characteristic of trading in markets, and we could have good news turn out to be bad news. In this case, we might have a better than expected number because of schooling, because of retail sales around the Christmas season. We had a very strong ADP number. We could have a very strong NFP. Could initially be good for the dollar, the normal reaction, but then things could turn sour, especially against the euro again and against the yen, because, as I think along the lines of what Dale said, we could have a thought of markets, okay, the situation isn't really good, it's just the numbers are a bit skewed, and the Fed is going to see these numbers and going to hike too much, and it's going to hurt the economy more, hurt the global economy more, and sell off in stock markets and the accompanying risk-off sentiment. So that's sort of my complicated scenario, if you wish, for the NFP.
Okay. I'd like to get to Valeria, but before I do, guys, I just want to show you a new T-shirt that I got here. I don't know if you could see it, but it's Mario Draghi playing electric guitar. Adam Button sent it to me so he could promote his company, Forex Live. But this is Mario playing the Euro, and he knows how to play and bend the strings and do a riff, so I just wanted to show you that. But, you know, we all talk about all these fundamental issues, but we all know as traders what's important is levels, and we have one of the best in here. Val is great with levels, and we have this expression here at FXStreet during our live coverage is don't try and bet on the reaction, but react to the reaction. So I'd be interested in some key levels from you, Val, going into the number. Euro held 61.8 back at 107 early in the week and rallied to 109 in a day. So I'm curious what you're seeing there, and some of the yen broke down under that very important support level at 118.50. 116.5 is the next target, and if it breaks that, it can be a very vicious decline, risk-off decline. So I'm interested. I haven't seen your charts in a while. What you're seeing here technically?
Well, yeah, I do agree with you with the euro, starting with that one. That the pair has corrected down to the 61.8% retracement of the December rally around 700, and yesterday it was trapped. Yesterday, ever since the year started, has been capped by the 23.6% retracement of the December rally. Means we are trading between Fibonacci retracements. I could expect that a break above this level can take us higher, closer to 110, right? But we need a really, really bad report to see that happening, okay? And on the other hand, if we lose 840, the pair can start correcting lower today, but 760, 750 is the level I'm looking for, not much more than that. I'm not seeing the pair still at 700. I do believe that the euro holds to most of its strength. I do believe that a better opportunity of selling in the case of a spike will be the pound, which for me remains quite weak, right? We have a major resistance around 46.40, 50. So if we take it, the pair can rally up to 47.10, 20. That's the level I'm watching. I do believe that that would be an interesting level to consider selling if we had a strong spike higher today.
Let me ask you this, Val, while we're on the pound, someone sent me a chart that showed 144 in the pound as a very significant area. I was wondering if you saw anything down there around 144.
Honestly, I don't. I believe that if we take the lows today, we are going towards 42. Okay. That's what I'm looking for. 42, 42.50. I have been following a bit. And those are my main bearish targets. If the case we break through 45, I do believe 45 is a major psychological support, and of course it's a level that we should take care of. And actually, this bounce from the approach to the first approach to 45 seems pretty normal, but it has been quite shallow. So honestly, I do believe that the bearish trend will prevail. So that's why I'm thinking of selling on higher levels. But if we lost 45, of course, I'm watching a rally towards 42, 42.50, okay?
Okay. Yeah. Thank you so much. Yohay, I'd like to go to you. And crude made new lows, took out historical lows. USD CAD making new highs for the move. I actually think we're getting close to a turn. No one will say that crude could even rally $4. Anemic response to the Saudi-Iranian disagreement or tensions. And also the Aussie came off, even though the gold's been acting pretty good. Is it possible that the Aussie might begin to follow gold? It still has not made a new low. We're about to flush out that 70 big round number. Any views or important areas that you see in the commodity currency complex?
Well, I think the tension between Saudi Arabia and Iran is all related to oil prices, and this tension now served to lift oil prices. I mean, during a few periods this week. Eventually, I remain optimistic about not having a serious flare-up in the Middle East, and I think it'll eventually get back down to supply and demand, and supply will eventually fall because lower prices for longer and no more hedges will eventually push down supply, and lower prices also lift demand. So I'm not sure maybe we're close to the bottom, but I don't think for the next few months we'll have a real rally from here. We could just bounce off the bottom until the dynamics of supply and demand change. For the Canadian dollar, we have a jobs report in Canada today as well at the same time, and this implies don't trade dollar CAD around the double feature jobs reports. Okay, and let's see if the Bank of Canada cuts interest rates if they want to support the economy. But I think in general it's good for the economy to have a weak exchange rate and eventually to move away from oil into other sectors. For the Aussie dollars, it's mostly about China. Eventually, once China stabilizes, and the Chinese authorities are doing their best to stabilize the yuan and the stock markets, sometimes doing confusing things, but eventually fundamentals in Australia are not that shabby, and we might. This dip under 70 could turn out into a false break. But let's see. We have the influx of news is huge in the past few days. So,
and the Kiwi's been holding up much better, demonstrating relative strength against the Aussie. You have a view there. Someone I interviewed made an interesting point that China's new two-child policy is going to increase demand for milk, and perhaps that's a fundamental theme supporting New Zealand. So how's the kiwi looking to you?
Yeah, milk, everybody drinks milk or eats cheese, or most people do, and that's a much more stable commodity than copper or iron that Australia sells. So in times of
Great
struggle,
point.
the kiwi always has an advantage over those. In general, also the economy seems more a bit more stable, well, less dependent on the Chinese demand for metals. And yeah, this two-child policy is an interesting point. It could filter into the demand for milk only later on this year because this law is really fresh. So assuming we get second children in Chinese families around October or September or November, then we could see the correlation between these two things. The kiwi did get carried away because of this Chinese stock market crash, the global crash, but it has held up pretty well, and I think it will continue to outperform the Aussie.
Okay, and we're about 17 minutes away from the number. Maybe we could get some views from both Val and Yohay on US dollar yen, which has really suffered under the risk-off environment that we have here and approaching levels we haven't seen for many months. I was talking last year about the yen putting in a right shoulder on the weekly chart, and we're not even at the neckline. Neckline would come in at the flash crash low. So I'm wondering if you think that could be tested, Val, and if taken out, where's the next level?
Yeah, I was thinking pretty much this is pretty much what you have just said, right? The pair is trading. We can look at the daily chart. We have major support in the 1860 area. We have taken this week. We are struggling there, not yet confirmed. And I don't believe that we've closed the week anywhere below this level. The current 1813, the risk is towards that 16, 10, 20 price zone. The lows we said that Black Monday, Chinese Black Monday, all those. Okay, so
where would you sell a rally? Where's resistance in this market if we get a recovery in the market, S&Ps, and the yen rallies with it, with risk comes back in? What's your level?
Yeah, I do believe that we are pretty far away. 21.35, 21.30 region is the level I will be watching to talk about diminishing the risk of a bearish continuation in here. If we don't take that level, that region, and we are not that far away, but we are well below it. Given we are talking about the yen, 300 pips, it's a world in here. But anyway, I do see, as you were saying, a probable head and shoulders developing, and this area being the neckline. It's clear in the weekly. Right, so actually, I pretty agree with you that we can see a wild slump in here. I do believe that if we lost that 16, we can lose 200 pips easily towards the 100 simple moving average in the daily, right? And if we take that 110, it seems possible. Beyond, I can't see it right now. And for the shorter term, as usual, I do see it as the first one reacting, okay, to the news. It will probably react straight, and we have some resistance around 1880. So if we can manage to move above it, we can go up to 1960. Okay, almost. That's the level I will be looking for. I'm not seeing the pair advancing much more, unless, I don't know, a really shock coming from the US. And of course, below 18, we can go test the weekly low of 1730.
Okay, before I go to Yohay on his view of the yen, I'd also like to ask you, Val, the gold has caught a flight to safety bids, had a real good week. Both you and I were thinking there's still, still could be new lows to come in 2016 in gold. A lot of people turning positive on this market right now. What's your take here? It looks like it's pretty dollar-centric.
It's a bit early to talk about a steadier recovery because, as you have just said, the rally has been triggered by risk sentiment, right? It's not about demand for the gold as a speculative holding, but just risk aversion. And additionally, I was watching I do believe we discussed this 11:10 right price zone where it stalled yesterday. Many times it's been a major resistance area. We retreat from there, and even we are retreating from the 100 simple moving average. 100, yeah. So I do believe that if we have more improved sentiment coming from China, the commodity can return towards its recent lows, you know.
Okay. Yohay, a view on yen and gold?
About dollar yen, yeah, of course, as we mentioned, and Svel mentioned, this risk-off sentiment boosting the yen. I think 115 is sort of the line in the sand for the Bank of Japan, where they'll begin talking about an overvalued currency and perhaps hinting about intervention and more QE. But they're also minded not only about dollar yen, but also about the value of the yuan. They're big rivals in China. And if the yuan continues weakening, we might have action from the Bank of Japan. But I would say that they're reluctant to act, that they'd like others to do the work for them, and that they would prefer to see markets stabilize in this wide range of 115 to 125. So I think the story will continue for dollar yen to be about risk on, risk off, as long as we don't touch 115.
Okay. Any view on the gold?
On gold, well, we did see gold strengthening a bit, but I don't have a specific opinion. Eventually, we are in a situation, in theory, where bad news in the world could mean good news for gold, because it's perhaps we'll have more QE and more speculative hot money supporting gold, but I don't think this will come to fruition, come to life anytime soon. So we do have natural demand for gold from jewelry and a bit from industry, from India, from China, and India is growing very nicely, outpacing China. So yeah, we could see gold maybe perhaps stay in range, pick up a bit, but not. I don't see it going anywhere fast because we don't have this huge speculation that we had in the past around gold.
Okay, Mauricio, you want to take it from here for a few minutes?
Yeah, of course. Sorry, there's a little bit noise here. So the question is, what is the forecast for the Nonfarm Payrolls? I see it's 2,000 new jobs, right? Yep. Valeria, what is the Yohay, what is the name that you are expecting? What is the number?
The number, I think it'll be a bit higher because ADP was higher and the ISM non-manufacturing PMI, the employment component there was higher, so I think it could be a bit higher than that, but I think markets are really expecting 210, 220, but I think it could be even scoot to the upside, but markets could take it not necessarily as a positive thing.
Okay, Valeria, what is your number?
As I said, I do believe that we are going to see a slightly negative number. I'm against you, Yohay, today. I believe that we are going to have a 160, 170. Anyway, it's just an educated guess, nothing more.
Yeah, interesting comment you got from Roger that he says the NFP report will reaffirm rate hike path of the Fed hike in March. So we get a strong number, the market's going to worry about rates again. Yep. So it might even be more of a relief for the market if we had the outcome that Val is talking about. So we'll see. But we have a very intelligent crowd of traders at FXStreet that come to our events, and many people who aren't known that have a lot of wisdom to share. That was a great comment. So it's all about the progress of the Fed. We've moved from when and if they'll do it to will they continue, how fast, or how slow, or some people still saying that they may end up having to reverse down the road. So it's going to be a very interesting year. What do you guys think? I've never seen a year start off like this.
Yeah, I agree with that. It's going to be another interesting year.
Well, it's just like January, so we have.
One
I'm off. It already feels like March to me after just 1 week of trading.
I was waiting for the.
Right, and it's payroll time to add to the excitement. It has been a heavy week indeed. I guess that because of all of those holidays we had and the wives had, but well, here we are. The good news is that this year we are not going to have such holidays, guys, because Christmas and New Year Eves are going to be a Sunday, so we are not going to have any holidays.
That's right. So I was thinking it was a May because if there is May, sell in May and go away, right? So everybody is selling right now, so it was almost May.
I just can't help but think that people are underestimating what's happening in Saudi Arabia, not necessarily that there's going to be a hot war between Iran and Saudi Arabia. But what's happening in Saudi Arabia is their biggest problem might be social unrest. They have a very large Shia population. The kingdom doesn't have the same budget they did to support the people that they used to. So social unrest, Saudi Arabia was one of the only countries in the Middle East to avoid the Arab Spring. And social unrest in Saudi Arabia is going to turn around this oil situation. There, in my lifetime, I've never seen the Middle East. You could say, people say there's always something going on in the Middle East. True, but I've never seen it in this condition before, with 3 or 4 wars happening in the Middle East and what's happening, and there is no geo risk, supply risk premium in the oil at all. And I'm not saying that we're going to re-enter a bull market, but the market is as short crude as it was short euro at 105 in my view, and I can't help but think that there's going to be at least some type of event that's going to create heavy short covering that could take us back to $40, $42. That's what I'm looking for in crude, and that should actually help the market because the oil and the S&Ps have been trading closely together. So I think that's really a linchpin to watch. All the worries in the market about the junk bond market are mainly oil-related companies and issues. So a bounce in crude would also create relief in the investment environment, in my extremely accurate and humble opinion.
Adding to that, remember that most of the major economists that are talking about their depressed inflation are blaming it on oil prices, right? Everyone is saying, inflation is not growing because lower oil prices. So I actually do agree with you that oil will be will have a stellar role in this year, and that we really need a recovery there above 40. Okay, I'm not seeing much more bearish scope. It could be speculative with a short-lived vibe, maybe, but I do believe that we are going to see a bounce there.
Yeah, when everybody's short, nobody's left to sell, as they say.
Yeah.
And regarding the Middle East, we could see a Saudi Spring. There's an oppressive regime worse than Iran. Of course, they're friends of the West, not like Iran, but they're usually worse. And now with low oil prices and social unrest and these tensions, we could see some big change there. And there's a new king there, but lots of infighting within the royal family. On the other hand, my optimistic view, that I prefer being optimistic, is that if we do have, we don't have a squeeze of these shorts, if we do have lower oil for longer, there's just less money to fund wars. For example, ISIS in Syria and Iraq is making a lot of money off of oil, and if oil prices remain lower for longer, that could hopefully pull the carpet under their feet and provide more room for some kind of peace. So maybe that's a pipe dream at the moment to see a more stable Middle East, and I'm from there. But got to stay optimistic.
Okay. Speaking of oil, I came to jump to the Canadian dollar. And guys, remember we have employment data in Canada to also, and it will be released alongside with the US data. So the dollar CAD may be able to post wild movements, right? Because of both economies releasing high impact readings. So stay away from the dollar CAD today, a couple of hours at least, until the pair settles, and you can plan further in perspective, right?
We got a comment from the community, again from Roger. I didn't even know this. We were talking about Saudi Arabia, and he asked me, or us, what do you think about the Aramco IPO? I didn't even know that they were going to do an IPO for their oil industry. So his comment is, it seems like a panic move from the government. So they're looking for all different ways to finance their country, and this is, something I didn't even know was happening, an Aramco IPO. Have you guys heard that Saudi was going to do that?
Yeah, today they stopped denying it, or at least said, yeah, that's on the agenda.
That's going to be interesting to know when they launch that, where they launch it. That's a big step. It's denationalizing their oil industry. Maybe they're looking, when a lot of times I'm pretty skeptical when people do IPOs, they're transferring the risk to the people that come in and buy shares. They're cashing out. Of course, they still, the principals in an IPO still have tons of shares and options on shares. But anytime you bring something to the public, if it's so good, why are you offering it to John Q. Public is my mind. So.
Okay, guys. So we are just about to, something for cash. We are going to the,
thank you, Roger.
number. Going to the number. We have a little bit of delay, and I will type the number in the chat. So keep attention and let's be the reaction of the reaction.
Are we going to have another wow?
Yeah, the expectation are 2,000.
10 seconds.
Jobs.
I'm scared.
Me too.
292.
Dollar.
Wow.
Let's go, dollar.
292. Wow.
Oh,
Better
wow.
Whoa. An unemployment rate steady at 5%. Canadian dollar.
Disappointment from average hourly earnings.
Okay. You are right. I was wrong.
A blind squirrel, the phrase. Anyway, but US average hourly earnings stayed flat, and that's a disappointment.
Yeah.
So initial dollar strength, euro dollar falling a bit.
S&P's like it.
Yeah.
Dow's up 200. They like it. 292. Wow. So that kind of cements. People are going to think that it's a lock for them to move in March again.
Yeah, and that could turn into bad news.
The Canadian dollar is not liking it at all. Gold either.
Let's look at the real unemployment rate. We also have a nice revision for November, 250. What was that? 252. Oh, we have actually. No, wait. Let me check that out. Real unemployment rate 9. No, it's not updated yet.
The pound is aiming to break the support, not confirming anything anywhere, but he also tested or approached it to the weekly low. We take it, we can go to 69.06, which is the September low, right?
These could be retail jobs, which are not as good as mining jobs, for example, but it's still 292, which is excellent.
Yeah.
I'll be looking for a buy in Aussie around 69.5 next week.
Okay.
Like I said earlier, take out that big round number. They're flushing stops now. Also, even though we have a dollar rally, it's not the kind we're used to on NFP so far.
292 is supposed to be 100 pips worth on euro dollar, and yeah, it's slow.
It is the highest number since the last December. I think.
Yeah, not by chance.
Yeah.
Retail related, probably.
Yeah, so far this is an anemic response in Canada. So it's all going to be down to Canada's number. Because with the dollar popping, Canada certainly isn't.
It's good. The data has been good, I believe, in Canada also. Yeah. The unemployment rate remains steady, but the net change in employment was much better than expected, over double than expected.
Yeah, almost 23,000 jobs gained in Canada, better than 10,000 expected.
And then 35 declined previous.
Looking for the participation rate in the US, which is always interesting.
I do see 62.6.
Okay, that's a tick up.
Yeah, a tick higher.
So gold doesn't like it.
No.
So, but the crude's hanging in there. So this looks dollar positive. The question I guess we're going to have is, are we still going to have a failing rally in the dollar index? To me, that's a big question. I'll show it on my screen here. This is delayed, but see two scenarios. Okay, so so this this was the break. This was the Draghi break before he got on my T-shirt. And are we gonna head up back towards 100? Still a lot of people talking about 102, 102 and a half, and that we're gonna fail. So I'm gonna be interested to see what happens in the Dixie up around par next week. So we're either going to blow to one more new high, or this is a failing rally. Your first indication that there's something wrong with the dollar and we're going to have a continuation correction would be back under 98. I want to see what happens early next week, possibly around that par level. Have something like equality from here to here, and this still could be a corrective process, and we're not necessarily going to blow to new highs. But there are a lot of people thinking that's going to be the jet fuel for, there's still a lot of S&P bulls that are still talking 2,200, 2,400, and it's going to be interesting to me to see if the dollar can make a new high on this rally attempt. That's a picture in the dollar.
Yeah, I see Eurodollar retreating from the lows. It didn't touch 108. Now it's 108.25. So perhaps we're beginning to see that safe haven sentiment, risk-off sentiment creeping back in. Dollar yen very stable.
Yeah. I hear you suddenly much better, Yohay. I don't know why, but all of a sudden you're sounding great. All of a sudden you're sounding great. Much better than previously.
Okay.
Anyway, a bit of a disappointment price action for me, but anyway, as we were discussing before, with the rate hike having been triggering.
Well, my view, Val, if you show your Euro chart, maybe the daily, the daily is, what we had from the low on Draghi was a little over a 500 pip move. We pulled back 61.8. We have another 500 pip move. It takes you up to 112, which was actually the breakdown. If you draw a trend line, here I could show my daily on it.
There?
It was this trend line. If you show mine, show my chart. Here's your daily.
You have your chart.
Yeah, okay. So here's a daily breakdown of that uptrend. and we could get back up there, and that would be a quality as well on the first wave up that we had. So here was your daily uptrend that was violated, and here's where the line's coming in now. And if we have something like this from this week's lows, it takes you to 112, 113. That's an if.
If, yeah.
You know, we could even take out last week's lows, and that count could still be good. So, you know, it's the most neutral I've been in the FX market for a while. And so I really don't know what to do. And I still have to learn to feel comfortable with not knowing what to do. Because I feel like I should know what to do all the time, but no one ever does.
When in doubt. Yeah.
Huh?
When in doubt, stay out is the known phrase.
Yeah, there's nothing wrong with cash. And I don't know about you guys, sometimes I see the market better when I don't have any type of attachment to an outcome. And you have to be flat to feel that way. At least I do.
Yeah, yeah.
Yeah, I'm looking a bit more and digging into the details of the report and seeing more good news. So wages are flat month over month, but year over year that they're at 2.5%, which is better than last month, 2.3. The revisions add 50,000 jobs in addition to the 292,000. The employment to population ratio has risen from 59.3 to 59.5. The real unemployment rate remains unchanged at 9.9, the U6. I don't see anything really bad here. The only thing maybe is that this jump in employment in December could be related more to retail because, well, we've seen something similar last year as well because we know it's Christmas shopping and because wages didn't go up month over month. But for the greater economy, I think if you look at the past 3 months, the average of job gains is 284,000 if I'm not mistaken. So, and wages are higher than their sort of range 1.9 to 2.3 that we've seen throughout most of 2015. So I put on my rosy glasses. This contrasts other figures in the U.S. economy which haven't been that good.
You are the president of the Optimist Club today.
Yeah, lots of coffee, I guess.
Well, you're very good balance for me. You know, they call Mark Faber, what is he, the Deacon of Doom or Mr. Doom? So you're good balance for me when I talk about the world blowing up. Don't you know we're on the eve of destruction? So it's good to have an optimist around.
Yeah. And by the way, I also bought the Draghi T-shirt, and he looks really cool there with the electric guitar. So that also makes.
Yeah, I didn't know he played guitar until I got this. So. Wow, what a week!
Yeah.
It's exhausting.
Doom, 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 and gloom, and suddenly excellent NFP.
Yeah,
what
all
do you do
it
with
takes.
it now? Yeah.
In a New York minute, everything can change. I do believe on this rally, I still think that yesterday's low in the S&P could be tested, taken out, and I do think that you're going to see people selling into this rip, and that the S&Ps still could trade down towards, if the yen breaks at 116.5 level, that the S&Ps could even retest those August and September lows, 1860. I'd actually like to see a washout to 1800 in the S&Ps and then a big rally up to 22, 24. So that's kind of what I have in the back of my mind is we're either bottoming here at 1930 or we're going to challenge last summer and early fall's lows before we get a turn. But I'm not in the crash camp yet like a lot of the bears. In fact, we're going to have the big bear, Harry Dent, with us Tuesday. So this is his, environment. I'm going to be interested, and I know what he's going to say. I'm just not sure about how extreme he'll be after this initial shot across the bow in equities. But you know, what was interesting was initially during the sell-off early in the week, the dollar was holding its bid until Wednesday. And I still think that weaker U.S. stocks equate to a weaker dollar, and stronger U.S. stocks equate into a stronger U.S. dollar. So if the dollar is not going to make a new high and go to 102.50, we could roll over again and test 96, 94, and that would tie in with the continuing correction in equities, in my view. For the last 6 years, people have been rewarded for buying every dip in equities. It may not be the trend. A lot of people are saying sell rallies now. Sell the rips instead of buying the dips.
I think that with stocks, they've received a lot of support from central banks, as we all know, and this week also an ex-Fed member, Richard Fisher, formerly from the Dallas Fed, said that they were front-loading a tremendous stock market rally. And this support isn't gone. Okay, the Fed stopped printing new money, and rates are rising very, very gradually, but they didn't shrink their balance sheet, and they're still reinvesting, buying a new bond for every bond that matures. So I think there's still support from the Fed, and in general, well, it's people have been rewarding for every dip they bought, and they think perhaps stock markets could return. Not become negative or positive, but just get back to the individual stocks a bit more. Some companies are just doing better than others, and it's not all boats rise with the Fed.
Yes, everyone's saying look, it was pretty selective last year. The FANG stocks were responsible for a majority of the gains, or many other sectors down 20% on the year, and not just oil. Biotechs, which were leaders, et cetera, et cetera. But so far, this looks just like a pullback to buy in the euro and the gold. You know, looks like we've corrected this week's bounce and trying to put in you have a little tail on this candle here. I'm not buying it. If it goes from here, it could go without me. I think we'll have some things and better ideas going into next week. I don't know about you guys, but I have found that anything that I want to do on Friday, for the most part, I could do early the following week. So I just don't see I don't feel compelled to act on a Friday. How about you guys?
Less in a payroll Friday.
Yeah. It can ruin your weekend, so better postpone it to Monday.
I used to have an expression that that people would ask me if I took home positions over the weekend, and I would say yes, because I can't relax unless I have something to worry about.
Yeah. So Sir Bedran from the chat is asking about the gold, what price and what levels to watch. I don't know if you, Valeria, wants to answer him.
Yeah, I was just drawing a Fibonacci retracement from this year's rally ever since the December 31st low to the current high, which is put, and the commodity has just by descent tested the 38.2% retracement and bounced back, right? And if you take a look at charts, the Forex charts, I mean, dollar is giving back most of its gains. So actually there's not much of a bearish potential in here right now. Although if we lost this low, we break through this low around 92, then the commodity can slide. But the upside seems quite limited for me at the time being, right? With indicators still pointing to continue correcting extreme readings reached this week. I don't know, maybe above 111 it can recover up, but it seems that we're going to go slowly lower, right, in corrective mode, but not confirming it in the long term, right? Just for a couple of hours, maybe consolidated between these two Fibonacci levels.
Okay, what do you think, Dale?
I don't think that we're going to resolve this issue until sometime next week. I like Del's chart, how it held to 38. It looks like if we get through there, we're probably going back to our confluence of moving averages, maybe around 1080, 1075. So I'm not sure it's going to hold and rally to new highs from here, just like I'm not sure if this was it, to fade dollar strength. I'm just comfortable with saying today, except for positions I'm building in the energy complex, as far as FX and the dollar right now, I'd love to sell a rally back at 120 or so in US dollar yen, but I've given my mouse to my wife and she put it in the wall safe, so I'm strongly neutral until next week as far as recommendations of positions here in FX.
Okay, thank you. So, changing of matter, following the strong ending of the year for the labor market, from the upward revisions in October and November, and the good number in December, do you think that the Fed has a solid path for hiking rates, and how many times it will
I won't call it
rise?
solid. I won't call it solid, but indeed, I believe that the Fed has been doing its best to prevent us from having surprises when it comes to rate high. I believe they have been trying to be really transparent of what they are going to do. So actually, I'm expecting a couple of rate hikes this year, although a slow pace. So maybe the first or next one will be in April. Regardless, that is improvements. If on the other hand we have negative data coming, then it could extend further. But I do believe that maybe we are going to have, I don't know, maybe 3 rate hikes all through the years, and that's why I'm thinking that April will be the first time we will see another rate hike in the US.
And what about you, Yohay? I know you are our Fed watcher. So, what do you think about the Fed?
I think they'll hike again in March. After this report, of course, the chances are just a bit higher. And that will give the impression for markets that they're really on course to fulfill the dot plot of raising rates 4 times this year. But afterwards, strong dollar and negative impact of oil prices, the not so strong US economy, I think it could run a bit out of fuel. I think the pace could slow down, and we could see perhaps a slowdown in the second half of the year alongside a slide in the US dollar. But for the next few months, for the a bit more foreseeable future, but again, who knows what's going to happen in 5 minutes, I think the Fed is on course to raise rates in March, and this supports the US dollar, at least against commodity currencies, and the pound against the yen. It's much more complicated, and even more complicated against the euro, because we have the ECB perhaps announcing more stuff in January or March, and well, in general, the eurozone is complicated. So, but the Fed, I think, is more. I think March. The next hike is in March.
And what about the UK? Do you think the Bank of England will hike rates this year or not?
Maybe there's a chance towards the end of the year, once we have the EU referendum behind us, once we have some more improvement in the Eurozone, and I am adding to my optimism, topping it off with optimism on the Eurozone, and that could, of course, also support the UK economy, which, well, distances itself from the continent, as they say over there, but they have a very close trade relationship. And so maybe towards the end of the year, but more at the beginning of the year, I see more trouble for the pound because the economy is slowing down because of the uncertainty about the EU referendum. So who knows? But second half things could be different.
I see. Thank you. Hey, so just to finish the live coverage, I want to ask Dale about his approach. He will leave right now. Yeah, I know, because he has to prepare his show. So Dale, what is your approach? What trader have to pay attention from now onwards?
Okay, well, just getting back to the Fed, Janet may say she's data dependent. I say she's stock market dependent. So it's going to depend where the markets are at going into that Fed meeting in March. If we're back on track and heading up, I think they'll move. And if we're still having instability in China and markets are under pressure, I think they'll stand pat. So I think they're more market dependent than data dependent, but they won't say it. I will. So I'm looking at the Aussie as a potential buy. I think the dollar is not acting great with a great number. So I'm leaning more towards this being a failing rally in the dollar. And the Aussie looks like it's turning. The pound may have bottomed for a move to 49. I have a hard time getting real bullish the dollar here. So I'm looking for dollar selling opportunities. And I invite everyone to join us in LAR in about 7 minutes. I have an interesting guest, Vlastimil Sobicki at Invest Forex Fund. He's a money manager. He'll be with us, and I'm sure that the Larians will have a bunch of ideas and charts to show. And like always, Mauricio, I really enjoy working. I think we're the best team on the net, and I enjoy working with you and Val and Yohay, and I learn from you guys every time we're all together.
We all do, Dale.
Yeah.
Thank
Strong
you, Dave.
start to 2016 with you guys. Yeah.
Yes.
Happy New Year, everyone.
Yeah, Happy New Year, and thank you for being with us today. And see you in 5 minutes.
And okay, thank you very much.
Thank you.
Good hunting, everyone. And remember, don't just count your pips, count your blessings. See you later.
See you. Bye.
Ciao, Dale.
Okay, so Valeria, I wanna ask you about your approach, about your, the levels to watch and what traders have to focus right now.
I don't know. I do believe that the day is done. It has been a very wild week, and we have payrolls, and we have the reactions to the data, and now the market is retreating those. So actually, I'm not expecting much more to happen over the coming hours, guys. Maybe some action at the beginning of a US session, about 35 minutes, and that's it. But most, I don't agree with Dale for most of them when it comes to dollar strength. I believe that we are going to see a bit more of dollar strength, particularly if risk aversion continues diminishing, right? But for this year, I mean, not right now, I mean, generally speaking. I still believe that the Japanese yen is the strongest currency these days. If you look at the chart, it's the only one right now accelerating against the greenback, having completely erased all the report losses. And I also believe that the pound is among the weakest, so maybe that's where your trades should be put these days, okay? And for the data, it has been good enough to confirm that the Federal Reserve is in the right path, in the path of tightening. So it's not like it's a huge surprise, meaning we know where we're standing and we know where we're going there, so not much of a surprise, and market trades surprises for the most, reacts to the surprises rather than trades, okay? I believe that's it for today, for me, at least.
Okay, thank you, Valeria. It has been a pleasure to be with you as usual. See you later with your reports, and the next week. Okay. Have a good weekend.
Goodbye, Yohay.
Ciao, Valeria. Ciao.
Okay, bye-bye. So, Yohay, you and I, we are alone here right now. So, what's going on? What will be happening?
Well, I agree with most or all of what Valeria said. I think the trends that we had this week so far will continue in the last dying hours of the week. That means a stronger dollar against the euro and the yen, a weaker dollar against the euro and the yen, the risk off, and a stronger dollar against commodity currencies and the pound. For the doom and gloom, this good jobs report means that we're going to have more rate hikes in 2016, in theory, at least we have more cement on the March rate hike, and that, of course, is bad for stocks, good for gloom, good for bad news. So I believe we're currently seeing euro dollar erase all its losses, I think we could see it move up from here a bit, and the same trend of a weaker dollar against the yen and perhaps strength against commodity currencies. Yeah, all in all, a great report. Also, wages are actually okay with the year-over-year figures, but the market wants to see the dark side, stock markets, and it can always find rate hikes to derail a recovery in the US, derail the chances of China recovering and things like that. So, yeah, let's see if the mood gets better next week.
Yeah, that's right. That's right. So you are telling us that it will be like a bad year for the stocks, right? For stocks.
I don't know if this trend will continue, but I see it continuing in the next few hours and maybe in the next few weeks. But perhaps afterwards, stock traders are going to separate the wheat from the chaff, the good stocks from the bad stocks, and China will support the economy. I am optimistic about the Eurozone, I think, for the first time in many years. I think the ECB's actions, the lower for longer euro, and perhaps some less austerity in the Eurozone will help the Eurozone, so maybe other areas can pick up growth from where China is leaving it. Also, the Eurozone is in here for the first time in a long time. So I think for European stocks, at least, I'm more optimistic than for US stocks because of QE and because we're seeing an acceleration of growth or a fall in unemployment in the Eurozone, and that hasn't been seen in quite a long time.
Yeah, I agree with you. So thank you, Yohay, for being with us. It has been a pleasure as always. Very clever. You are our Fed watcher, so thank you very much. Have a good weekend. Have a good weekend, and good trading. And see you next week.
On the other side, yeah. Enjoy.
Okay. Enjoy. Bye bye.
Bye.
So, guys, just refresh your page right now in the live video page, and you will get Dale and the live analysis room and the whole team and the whole community with us. Thank you very much for coming to trade the Nonfarm Payrolls with us, and see you in the next week and the next day and the next live coverage. Good night, good day, and good afternoon. Bye-bye. Peace.